despite all this chopping and volatility that we've had over the last couple of days, markets just really kind of continue to go nowhere for the moment, waiting on to see what the Fed's going to do. This is what you need to know before the bell this morning. Of course, market is glued to this fact about what the Federal Reserve will say this afternoon. But as we said earlier this week, the market really just kind of hanging on to kind of just where it is right now ahead of this policy meeting, not really wanting to make any drastic changes whatsoever. And the market over the last couple of days in particular has just kind of stayed at the same level. Yesterday, the markets actually, opened a little bit stronger, sold off, and then rallied back towards break even yesterday. The day before, we had rallied strongly, sold off to break even by the end of the day. So again, for the last 2 days, the market's really gone nowhere. We just simply stay within this very tight kind of consolidation range that we've been in, and kind of this key support line just continues to hold. So again, despite what, kind of all this chopping and volatility that we've had over the last couple of days, markets just really kind of continue to go nowhere, for the moment, waiting on to see what the Fed's going to do. Importantly, though, as we said yesterday, and again, this continues to kind of be the case, we have this very confined consolidation range that the market has been compressed into. So really, whatever this announcement is today likely is going to lead to a directional movement in the market in one direction or the other. If the Fed comes out, says something that is extremely hawkish, suggesting that they're going to be hiking rates even more, right? Because they're really concerned about inflation. That's probably going to send the market to the downside here, breaking out of this consolidation range, retesting these lows that we had back earlier in August. If the market comes out and basically says, the Fed comes out today and says, hey, we're staying where we are, we're pat. Nothing really too dovish, nothing really too hawkish. Probably the market's going to remain a little bit consolidated, kind of right where it is. Of course, a more dovish statement, a flat out statement, we're done hiking rates, as an example, kind of like the ECB just did recently. That can certainly lead to a breakout to the upside. As we've talked about, we're wrapping up the seasonally weak period of time. If you'd invested $1 on September the 19th, going back in history, over the period from the 19th of September through the 1st of October, you generally lose about 1% of your money over that period. Of course, once we get into October, things start to improve rather dramatically in terms of returns through the end of the year. And again, as we talked about, we'll also be kicking off earnings season. So there's a lot of things that continue to support a move higher in the markets here through the course of the rest of this year. But in the short term, we have certainly a good bit of risk here because of just we're in that period of time. So there is some downside risk. You don't want to discount that entirely. A move down to 4360 on the S&P 500 is a 100-day moving average. That's certainly well within the realm of possibility here. Get a little bit more of a sell-off, get markets more oversold, and then that sets you up for that rally into the end of the year. But probably the most likely outcome is just kind of continued kind of a consolidation here, really not moving up, not moving down a lot. And then we'll move into a better period as we get further out there. That's what you need to know before the bell this morning.